So welcome to the CPA FAR sessions. So I along with Sripal would be taking you through the content, the live sessions, right? So just a quick introduction of myself. I am Suraj Lakotia. I am a chartered accountant and CIMA UK qualified. I have a work experience of over 7 years. I have work experience of 7 years and I have a teaching experience of over 8 years. I also have all India ranks 1, 4, and 2 in my CA exams. So I primarily teach financial reporting for CA final, for CA Inter, ACCA, and CPA. Right. That's a brief introduction. Now, few ground rules I would like to set up before we begin these sessions. I'll be turning off the video to save bandwidth and to avoid distraction. And all of you should be on mute. As we take classes, as we teach, go through the classes, I will be taking you through the notes. I'll be giving you some examples. We'll be largely using Excel to understand various concepts of FR, right? Now, there's some question. Just a moment. Should we take notes during the class? So notes not required. You pay full attention in the class. As we discuss the concepts, what you have to do is after each class, you have to go back. You have to revise the theory, whatever we have discussed. If required, you go back to the problems, and then what you have to do is if at all you find something difficult, you can mark it separately and make a note of it. Separate notes during the class is not required, and you can follow the sequence what we have been teaching. Yeah, Sanjay will try the best to have the sessions as per the schedule. There could be some variations because sometimes some topics need more time depending on the student's configuration. Right. Now, one more thing before I start, I would want to understand the composition of the class. So, how many of you have not pursued? I'm saying, please hear me out carefully. How many of you have not pursued any professional courses like CA, CMA, CAS, ACCA, CMA? Nothing, no professional course, only you have done your graduation. Please raise your hands or you can type it out in the chat box. So a lot of you have not pursued any professional course. Okay. Now, what you have to understand or what you need to be mindful is that during the class, as we take the class, there are a lot of students who have pursued professional course and they might be faster in their responses whenever I ask question. But that does not mean that you need to be scared. Okay, so just because somebody's answered the questions which I've asked faster, you don't need to be scared. That's the first thing. Second thing, even if you have not pursued any professional course, we will start everything from basics. So that is how we will follow. So no need to worry that, okay, we are not able to follow something, we are not able to understand something. We will give you additional resources that will help you understand. That is the second part. Thirdly, questions you should ask at the given specific slots. If you ask questions in between, see, you are about 150 plus 170 actually. So if you ask questions in between, it actually becomes difficult for us to respond. It interrupts the flow of the class. So while asking question, after this, when I start the class, I will make the chat visible only to the admins so that other students don't get disturbed in the flow. And when you will ask questions, I'll give you a specific time where you can ask question. At that point of time, you should be asking questions. Okay. Chalo, so give me a minute and then we will start off. Someone has asked whether we'll be covering Becker questions. Yes, we'll be covering questions, some specific questions. But I would want all of you to spend more time in practicing than me solving in the class, because if I solve in the class, you'll feel, oh, everything is easy. Okay. But if you practice on your own, that is when you will realize how difficult or how easy is the question. Recording is not allowed, so please don't send any request for recordings. I have given, so there are some questions which I'll be just addressing before we start of the session. I have some time in hand during the weekdays. Can I refer to the recording available? You can refer. It is fully up to you. If you want to go, follow the class and then go back to the recordings, you want to go ahead in the chapters, you can do it. Okay, so that is fine. So that should not be a problem because, it is given in a flow and you can follow that. That's not an issue. So first 2 days, the class would be about 1.5 hours. Okay. Gradually, we will increase the duration of the class. Recording will be updated after the class gets over. It will take 2 to 3 days time to get it updated. For notes, books, access on portal and all of that, you have to contact the student, relationship team. Okay, whatever you want, download of notes, access to portal, all of that, please direct them to the student support team, and they will guide you. Today it will last till 8 a.m. Today and tomorrow it will be till 8 a.m. Again, for issues related to book, issues related to your, access to portal, software and all of that, please reach out to students support team. So we start with the first fun, and you can contact how you have, contacted for registration. The same way you can contact, there will be some system and they will help you with that. Okay. Because I am not involved in day-to-day operations and all of that, so I'm not aware of how the support system and all work. So the way you have contacted for registration, you would have contact with someone for signing up. You can contact them; they will guide you. Okay. Yeah. So we start with financial reporting. And financial reporting, now, if you look at the name, it says financial reporting. And all of us, we would have. Okay, so I think we'll start off. Any more questions, we'll take it towards the end now. Okay. So we are talking about financial reporting. And all of you would have heard about accounting. Right? Now, what we are doing or what we will be learning is not accounting. So accounting is where you record the transactions, where you prepare the ledgers and all of that. That part we will not be doing. We will be looking at how these accounting transactions are finally presented. So when we say accounting, this is day-to-day recording of transactions. Okay. Now, what we would be doing is we would be doing the reporting part. Reporting means all the transactions which are recorded in the business or in a particular year, all of that is summarized and it is presented as financial statements. So you would have heard about P&L statement or P&L account. You would have heard about balance sheet. You would have heard about cash flow statements, right? We would be talking more about the reporting aspects than accounting aspects. Yes, some day-to-day, some journal entries you may be required to pass. That is absolutely there. But large focus would be how does a particular transaction impact the profit and loss, the balance sheet, the cash flow statement. Okay. So that is what our entire focus would be. We would not be doing basic day-to-day journal entries. That is one thing. One more thing. How many of you have issues in understanding accounting and journal entries? I hope all of you are comfortable in passing journal entries, right? So because that is the basic we expect. If you have a lot of difficulties in passing journal entries and all of that, I think there is a basic course on accounting which is available. If that is also not sufficient, then you can reach out to me. I will guide you on how to get some modules which will help you to understand the basics of accounting. Okay, because I also run a company by the name Indigo Learn, where we teach students of CA. Right. So if you have real issues in passing journal entries, understanding basic accounting and all of that, you can there is already a course. There are already lectures available. Otherwise, you can reach out to me. I will guide you on how you can access them. Right. Okay. So every company. So every company, when we have company, we have certain investors in the company. Investors give money to the company to run the business. Companies carry out transactions. And at the end, they prepare a summary of the financial performance, what has happened, the P&L, the balance sheet, the cash flow statement. And that is given to the investors, right? So I'll show you a sample of an Amazon's annual report. So if you look at the annual report, so this annual report is prepared by every company, every business, which is provided to investors, bankers, government, whoever needs it. So here, if you see, you have all of these items which are a part of financial statement. The first one is the report of EY LLP. This is an audit report because you have invested money in the company. Someone has to check whether things have happened properly or not, things are disclosed properly or not. That is given in the auditor's report. Then you can see here you have statement of cash flows, statement of operations. So this statement of operations basically gives you the P&L part. This gives you the P&L part. This also is the P&L part. Balance sheet, all of you know. Stockholders equity gives you the part of equity in balance sheet. And you have notes to financial statement which explains various accounting policies and some disclosures. Okay, so this is how it is structured. This is how it is structured. So if you just have a broad overview, so audit report will exclude it, you learn as a part of audit. So you can see here consolidated statements of cash flow. Okay, so this basically tells us how much cash we have received or how much cash inflows were there and how much cash outflow was there during a given year. So this statement gives me what money has come into the business and what money has gone out in the business. So this will be there as one of the chapters where we will understand how to prepare cash flows statement. Then here you can see consolidated statement of operation, basically explaining what are the sales, what are the expenses, what are the other income, income before income taxes, provision for income taxes, then basic earnings per share, diluted earnings per share. So we'll also be learning about how to calculate basic earnings per share, diluted earnings per share, and all of that. Okay. Then we have this part called statement of comprehensive income, which includes net income and other comprehensive income. So normally when we prepare or when you would have learned about profit and loss, you would have only learned about profit and loss account. Here we are splitting the profit and loss account into two parts. One is the income part, normal income, net income part. The other one is other comprehensive income part. So this part also we'll be understanding. Then we have balance sheet. Now, if you see in the balance sheet, you have assets first, followed by liabilities and stockholders equity. So each of these sections, stockholders equity, what is treasury stock, what is additional paid in capital, what is this other comprehensive income, all of these we will be covering as a part of our sessions. Not only this, we will also be looking at some specific items. For example, we have long-term debt. How is the long-term debt accounted for and all of that we will be looking at. Okay. Similarly, if the aspects related to stockholders equity, what all would come into stockholders equity, that we will be going through. Then treasury stock. How do we account for treasury stock? So all of these things we would be covering up, right? The reason why I showed you this, first P&L and balance sheet is for you to understand the context. Now, this document that you're seeing on the screen, that is a summarized form or that is a summary of the performance. So what happens is when you have this P&L account gives me what is the performance. Balance sheet gives me what is the position. Position means positions of assets and liabilities. Performance means performance of the company. Okay, so that is the basic overview of what we are going to cover in these chapters and other chapters. So the first module talks about balance sheet, income statement, and comprehensive income. Second, we'll talk about EPS and how some aspects are reported. Then stockholders equity. Now, under the US GAAP, so US GAAP is, when we say what is US GAAP, US GAAP is basically GAAP means generally accepted accounting principles. So how should companies account for transactions is given by generally accepted accounting principles. There are multiple frameworks. These are basically frameworks or rules or policies, you can say, which help us understand or which tell us how do we account for some specific transactions in in our books of accounts. Okay. Now, when we say GAAP, US GAAP is followed in US. Okay, so when we say US GAAP, this is US GAAP, which is followed in the US. Then we have something called as IFRS, which is International Financial Reporting Standards. Okay, this is generally followed globally. In most of the countries across the globe, we follow IFRS. In India specifically, we follow something called as Ind AS. This is linked or based on IFRS, right? And in India, we also have something called as accounting standard or AS and all of those things. So basically, these are frameworks. Frameworks means rules, principles. How should we account for some transactions? That is given by the respective GAAP. As far as the CPA exams are concerned, we will be using US GAAP. Okay. So under the US GAAP, general purpose financial reporting. General purpose financial reporting means a financial statement prepared for general purpose for everybody. It's not specific. For example, the annual report that I showed you, Amazon. This annual report is used by investors, bankers, government, everybody, or prospective investors. Everybody uses this general purpose financial statement. Okay. Then we also have specific purpose financial reporting. For example, I have to take a bank loan and the bank has said you have to prepare the report in a specific format. In that case, we follow specific purpose or special financial reporting framework. Or if you have to go for public issues, listing of companies, we follow special purpose financial reporting. Right. So general purpose financial statement includes statement of financial position, the balance sheet, statement of earnings, the income statement, statement of comprehensive income, this you will understand subsequently, statement of cash flows, and statement of owner's equity. So these are the 5 items which are presented in the financial statements. Okay. Now, in the balance sheet, when we talk about balance sheet, we have on one side assets, on the other side we have liabilities and equity. Liabilities and equity. Okay. On one side we have assets, on the other side we have liabilities and equity. Assets are resources which are controlled by the entity and which gives us future economic. Any asset, anything you have to call an asset, that should give us future economic benefit. How will it give us future economic benefit? For example, if I have a machinery, okay, I can use that machinery to generate, to create products, sell the products in the market and get economic benefit, right? For example, if I have account receivable, somebody has to pay me, I will get future economic benefit in terms of money being received from the customer, right? So assets gives us future economic benefits. Liabilities are our obligations, and this will result in outflow. So obligations means I have to pay someone, so that becomes my liability. Asset will give me benefit, there is an inflow. Liability is an obligation where there is outflow. Equity is residual interest. Residual interest means if I have, for example, assets of 1000, liabilities of 400. So with that assets of 1000, I will pay off the liabilities of 400 and I am left with 600. That is what is referred to as equity. Now in the balance sheet, if you see, you have on the asset side cash and cash equivalents. So cash means money. Cash equivalent means something like money. So cash means hard cash. Cash equivalents mean something which is close to cash. For example, deposits in bank. Trading securities, these are basically the investments. Account receivable, amount that has to be given by the customer. Notes receivable, similar to account receivable. We'll come to notes payable at that point of time, we'll understand. Inventory, the stock. Prepaid expenses. Now, prepaid expenses is basically a case where I have paid future expenses in advance. So that is also shown as asset because in future, I will get some service. That is also a benefit for me. Okay. Then investment. So on the asset side, you also have investments. Then your property, plant and equipment. So property, when we say something to do with land and building, plant and equipment, the plant and machinery. Then you have goodwill as an asset. Please don't scribble on the screen. Then we have, there can be any other asset. Now coming to the liability side, we have debt. See, current, non-current and all, we'll understand subsequently. So no need to worry about that. We have debt. Debt means the loan which is payable. Okay, some loan which you have to pay, that is debt. Accounts payable. Accounts payable means your suppliers, creditors. Interest payable, interest paid to bank. All of these are your liabilities. Then you have equity. Under equity, you have capital stock, common stock, and all of those things. Okay. Each part of these will be discussed subsequently in detail. Now, a couple of things which I want all of you to keep in mind, especially for those of you who who have not been exposed to US GAAP earlier. In India, we say something as equity shares. The same thing is referred to as common stock in the US. We have preference shares. We call it preferred stock. We have something called a securities premium. This is called as additional paid in capital. So there are these terminology changes which we need to be aware of. Don't worry, if you have not heard of these terminologies also, we'll be covering them as we progress in the class. But this is for the benefit of those of you who have been so used to the Indian accounting system that you have to be careful what you are writing in the examination. That is why this difference you have to be mindful of. Now, as I told you, these investors put some money into the company. They are given their money. So, for example, if I give you an example, let us say you look at a company, Reliance Industries, okay? And let us say you all are investors. Now, all of you investors, you put money in Reliance Industries. Why did you give money to Reliance Industry? So that the company can carry out business, earn profit, and give some return back to you. Now, how does Reliance do its business and all of that? That depends on the board of directors, the management, and all of that. But at the end of every year or at the end of every quarter, they have to communicate to the investors that, okay, in this particular period, we have made so much of sales. There has been so much of expenses. Then there has been, this is the other income. This has happened. That has happened. All of that is communicated to the financial statements. Okay. Now, these financial statements like P&L account or balance sheet, whatever we have discussed, it is not only used by investors, it is also used by prospective investors, someone who wants to invest in the company. These are also used by bankers to check whether we should give loans or not. These are also used by governments to check how much of tax we have to levy on the given company. Okay, so the financial statements or the income statement or the balance sheet and all of those things, those are not only restricted to investors, those are used by other entities as well. Okay, so next we'll understand why do we prepare income statement and some specific terminologies of income statement. The purpose of the income statement is to provide information about the uses of funds in the income process. So basically, how much money we generated, how much income we got, what was our revenue, what is our expenses, all of that is given by income statement. So if we come back here and see this particular thing, so this consolidated statement of operations, that is also an income statement. It tells us product sales, Amazon, service sales, your AWS, Prime, and all of those things. Operating expenses, what is the cost of sales, cost of fulfillment, technology and content, marketing, general admin. So basically they're saying we have spent so much of money and we have earned so much of revenue. So that gives us operating income. Now, one thing you have to understand, operating income means the income which you have received from your core operations. For example, if I am in the business of providing classes, my operating income will be the revenue that I have received from the students and expenses that I have incurred in providing the classes. That two compared together will give me my operating income. Then we have things around interest income, interest expenses, all of those things. Those are not related to operations. They are presented separately. You can also have some other income. For example, we sold some land, we sold some equipment, we made some other profit. Okay, all of that is non-operating income. These two put together gives me income before taxes. Then I have provision for taxes, then net income, and we continue after that. Okay, so the income statement basically tells me what is the revenue and what is the expense. Okay, now why is the income statement required? It is required for determining profitability, how much profit has been earned. Then if you want to invest in a particular company, you will look at the P&L statement or the income statement and see, should I invest in this company? Is the company increasing in profits? Is the company's profits declining? How much cash flow are they generating as compared to profit? So for all of that, you need income statement. Okay, so you can use the income statement. One is to evaluate the performance. Evaluate performance and profitability, investment decisions. And sometimes what happens is, if I have to forecast future financial performance, I can use the existing, last 2 or 3 years P&L, put some inputs and get the future or forecasted P&L. Right? Now, some specific terminologies which would be useful and that we need to understand as we progress in the chapter. These are basic terminologies, so some of you may find it pretty simple and easy. Okay, so don't worry about that. Don't think that, oh, CPA is so easy, we know everything. This is just the starter. As we move to the next sections on, bonds and other things, there you will actually feel the heat of the difficulties. Okay, so this is just the start, and I know a lot of you will be thinking, all of these things we already know, but you also need to be mindful of some specific aspects which are differently treated in the US GAAP as compared to others. Okay, so terminologies. Now, some specific terminologies. One is cost, and the second one is unexpired cost. Now, what does that mean? Let me give you a very simple example. Let us say there is a business. It has taken insurance policy. This insurance policy runs from 1st of June of 2024 till 31st of May 24. Okay. 1st of June 24 to 31st of May 25. That is the formula. Now, this insurance policy will paid a premium of, let us say, $10,000. Financial year ends, this is also called fiscal period, on 31st of December of 24. Please remember, most of the questions, unless specified otherwise, you have to solve it using an assumption that the year ends on 31st December of 24. Okay, now we paid a premium for 1 full year, but the entire premium is not related to current year. How many months in the current year, or how much of premium, or how many months in the current year should we consider that we have paid the premium for, and how many months in the next year have we paid premium for? So if you see, we have paid for 7 months. Yes, very good. It's a simple thing, but sometimes what happens is, while counting, you have to count. Sometimes I'll say 30th June. Don't think it is 1st of June. Okay, so 1st of June to 31st of May, current period, 7 months. Next year, 5 months. Now, I've paid 10,000 for 12 months. So divided by 12, it's for 12 months, not for 10 months. Somebody mentioned 7,000. 7,000 is not right. I have paid 10,000 for 12 months. So per month, it works out to 10,000 divided by 12, which is 833.33. So current year expense will be 833.33 multiplied by 10,000. That is, sorry, 833.33 multiplied by 7, that is 5,833, and next year expense is 4,166. This is called unexpired cost, or what you call prepaid. This is the cost for the year. So cost means basically any outflow of resources that has been incurred in the period to earn revenue or to run the business for admin purpose. Anything you incur, that is called cost. Unexpired cost is nothing but your prepaid expenses that is relevant for the subsequent period. Okay, this is based on the concept of matching concept. There is a concept called you have to match income and expenses. So future expenses should not be accounted in the current period, or future cost should not be accounted in the current period, right? Only current period expenses should be accounted in the current period. So cost is an amount which is spent or expended for items like capital assets, services, merchandise received, all of that. Basically, something that you have paid an amount for. Okay. Now, one more thing I would like to ask, and this will be an open discussion. Not 3 months in the next year, it is 5 months in the next year. Okay, it will be an open discussion. Sir, please repeat the working. Okay. We paid 10,000 total premium for 12 months. Why 12 months? From June 24 to May 25, it's 12 months period. Then every month it works out to 833. So current period we have 7 months from June till December. And next year we have 5 months. So current year expenses will be 833 into 7. Next year expenses will be 833 into 5. Why is next year premium prepaid? Because normally insurances work on a year-to-year basis. If it is available till the year end, it is okay. Because we have paid the amount for a next period, which will be covered in the next financial year. That part we say is we have paid in advance. Prepaid means paid in advance. A business purchased goods worth $10,000 on credit. Okay. What would be the accounting entry you would pass for this? No, it cannot be debtor to sales. We have purchased. Please.
Purchases to X.
So inventory to Mr. X.
Okay, so to avoid, because we have 180, 190 students, if all of you start giving the answers orally, it will become difficult for me to manage, right? So I have received 4 types of answers. Okay, that is where basics have to be very, very strong. First answer I got was purchases to Mr. X. Second answer I got, somebody told me sales to Mr. X. Then I got one unique case as well, just a second. Then I got inventory to account receivable. Then I got one more, inventory to Mr. X. Okay. Now, first thing is business has purchased. We are accounting in the books of business. So there is no question of sales coming up. So this you will just strike off. Account receivable arises when you have a sale happening. So account receivable also does not work. Now, all of you or most of you would have been taught that the entry has to be purchases to Mr. X, which is also incorrect actually, because whenever you purchase an asset or whenever you purchase an inventory item or whenever you purchase goods for 10,000, you have to treat that as an asset. It is an asset that you have purchased. Okay, so purchases to Mr. X is also incorrect. Whenever you purchase goods, I know during your 11th standard, 12th standard, BCom and all of that, they would have taught you that it has to be purchases. Purchase is an expense, but that is not how you will account for it. Whenever you purchase goods, you will debit inventory. Inventory is an asset, and this asset will be shown in the balance sheet. Okay. Now, let us say we sold these goods to Mr. Y for 12,000. At that point of time, what you will say, Mr. Y, debit Mr. Y, credit sales 12,000, 12,000. Okay. Now, I have please visualize this scenario. I have inventory of 10,000, which I'm saying is an asset. I have sold that inventory. That inventory is now gone out of the business. So what I will do is I will expense this inventory by passing an entry called cost of sales 10,000 credit inventory. This is how actually a purchase and sale transaction is accounted for in real life, which you have to be mindful of. Okay. So here, what has happened? Inventory initially is my asset. Subsequently, I have taken that inventory and I have considered that inventory to be my cost when I sold the inventory to a customer. Okay, so in accounting, when we'll account subsequently, most of the cases will be using inventory to payable or inventory to cash. Till the time the goods are with me, that is not my cost. Till the time the goods are with me, that is not my cost. Only when I sell it, it becomes my cost. Okay, so that is one thing I just wanted to. Sold these goods for 12,000. So you will debit the customer, credit sales. And when you sell the goods, the inventory that you have recorded here, that inventory becomes my expense. So I will credit my asset and I will debit the cost of sales. So finally, my profit will be sales 12,000, cost of sales 12 minus 10, that is 2,000. Okay. Then financial year would be from January to December. If nothing is mentioned, it has to be from January to December. Okay. So unexpired costs are the costs that will expire in future periods and will be charged in the future periods. Cost is charged for the current period. Unexpired cost will be something which will be charged in the future period. For example, unexpired cost inventory. When I purchase inventory, it is an asset. When it becomes cost of goods sold, when I sell the goods, then it becomes my expense. Same way, I gave you an example of prepaid cost. It becomes my insurance expense. Then fixed asset. When I purchase a fixed asset, that is not my expense or that is not my cost. When I depreciate the fixed asset, that becomes my cost. Same way, cost of patents, when we subsequently expense it, that becomes my cost. Very simple concept, but you need to distinguish what is my asset or the unexpired cost and what is the expired cost. Then we have to simple concept of revenues and expenses. Revenues are basically nothing but the amount of consideration to which the entity expects to be entitled in exchange for goods or services. For example, you have taken classes from Simandhar. Okay. Now for Simandhar, revenue is the amount of money or the amount of consideration that it expects that you will be paying for the services that has been provided. That is what is revenue. Okay. And we will report revenue on gross basis. Expenses, basically expenses means those items of cost which are giving me benefit in the current period, I will show them as expenses. If it is giving benefit in the future period, it is not my expense. So revenue, gross amount, expenses, gross amount. Okay. Then we have something. So for example, in this case, our revenue was 12,000, cost was 10,000. We have shown it on a gross basis. right? We have shown it on a gross basis. Second thing is revenues are some things which arise from our core operations of selling goods and services. Okay, but sometimes what may happen is, let us say I have a car, used car in business, amount in books is 10,000, sold at 12,000. So here there is a gain of 12,000 minus 10,000, 2,000. Okay, so the thing that you have to understand is, if something is my operation, if something relates to the goods and services that I will be selling or transferring, right, that I will present as a gross amount. That will present it as gross amount. But other items of income and expenses, other item of gains and losses, what we say, for example, sale of fixed asset, sale of investments and all of those things, those are not my revenue. So revenue is something, what you can understand is, revenue is received from core operations or supply of goods and services to customer. Okay, that is what is revenue. But your if I'm selling my used asset, that is not a part of my core operations. So the gains and losses, they are reported on a net basis in the financial statement. Okay. So gains are reported at their net amounts, okay, which is related to something not in the ordinary course of business, okay, which is nothing to do with the nothing incurred in the ordinary course of business. Same way, losses are also reported on the net amount where they are not in the ordinary course of business. Okay. Now sometimes what happens is, some of the gains without incurrence of any expense. For example, they have given an example of, you found some gold. There also you present them as gains and losses. So the distinction you need to understand here is something which has to do with your ordinary course of business. For example, I am in the business of buying and selling cars. For example, I am in the business of buying and selling cars. If I am in the business of buying and selling car, the purchase value of the cars is shown on a gross basis in the financial statements. Sale value of the car is also shown on the gross value in the financial statement. Gross value means at the transacted value. So here, when I say gross value, 12,000, 10,000 presented separately. Whereas for other items, you will present only on net basis. So if we come back to this annual report, here you can see product sales separately given, operating expenses separately given. Whereas other income, you have just given a net item, means you are not splitting between income and expense. You are only saying net income or net gain. Okay, so I hope the difference between gross and net basis is clear. If anyone has any doubt, please ask. If something is from operating activities, we show it on gross basis. If something is from other than operating activities, we show it on net basis. Yes, the profit arrived in the car business is gross profit. Okay, so there are some questions which I will be addressing. For every sale made, will there be a cost of sales entry posted? So what happens is, system automatically, see, these days all accounting is done through system. So the moment inventory is out, it is added to cost of sales. We do not show gain in gross amount because that is not an ordinary activity. See, selling of fixed assets, selling of inventory, selling of your, let's say, assets, all of that you will show it on a net basis, because those are not your core operations. The investor is not bothered about at what value did you sell your used car. Investor is more bothered about how much are you getting from your core operations. Maximum profit, if you see, here you see, right, operating income is 12,421. That comprises the maximum part where you have to give the breakup. If I start giving breakup of other income also, then the investors will be confused that what is happening in the core operations. The other thing you have to understand is, sale of car for a business, it is not a day-to-day activity. So in 1 year you will sell, let us say you sold some land. In 1 year, let's say you sold some land, you made huge profit. If you add it to the revenue part here, then if you add it to the revenue part here, investors will not get a clear picture as to whether it is from your normal activities or it is from other than ordinary activities. So your revenue will be unnecessarily at a higher rate. That is why we show only revenue from ordinary activities on gross basis and expenses from ordinary activities on gross basis, non-ordinary, other than ordinary activities on a net basis. Okay, so that is how it is done. Gross and net means basically, here you can see sales separately, expenses separately, it is gross basis. Here other income, when you show, you are taking the income and expense, subtracting them, and if it is a gain or loss, it is shown on a net basis. Here it is an expense. Previous period there is a gain. Previous period to that is also there is a gain. So a lot of time what happens is, if a business sells off a property, then they make huge profit out of that. And if that they show it as a part of revenue, it will distort the revenue picture. Okay. So I hope it is clear now, and we'll continue ahead. Discontinued operations and all will come subsequently. So at that point of time, I'll explain it to you. See, profits and gains, the meaning is normally same. Okay, but when you say profit, it is normally referred to your operating profit or how much you have made out of profit. When you sell a, let's say a land or a building or an asset, and you get some, profit out of that, that is referred to as gain. Now, we have a concept. So far we have discussed the broad structure. Now we have a concept of continuing and discontinued operations. Okay. Now, what is this continuing and discontinued operations? For example, just for example, let us say, no. If we have multiple income, other income, you will on the face of the P&L. So what happens is, here you will show it only as a single line item, and you will give the breakup subsequently. So I'll show you the breakup. So here they have not given a breakup. Okay. But normally what happens is, I couldn't see the breakup, but normally what happens is the breakup of that is given subsequently, that what comprises of the other income. Just give me a moment. I'll show you some other annual report, which will give more clarity. For those of you who have not handled, these kind of scenarios. So this is based on Ind AS. So here you have see others, right? Again, we don't have a breakup of that because this item may not be material. So what they do is, normally after the financial statements are presented, we give something called as notes forming parts of account, where you will find the breakups. Okay, so in the notes forming part of the financial statements, just come down. Here. So you give a breakup like this. How much is the revenue from operations? Okay. Then what is other income? And what is the breakup of other? So something like this, they would give a breakup of other income, interest income, dividend income, government incentives, profit on sale of investments, MTM, dividend received from subsidiaries from this. So this kind of breakup is presented. Okay, this is what is other income, right? So here profit and sale of investment. Now, which investment did they sell? That may not be material. So they will not give a breakup of that. But broad level breakup of how much of interest you have received, dividend you have received, government incentives, sale of investments, and mark to market gain or losses. So that is presented separately. I hope this addresses your questions. You can find annual, just do a simple Google search. Just say annual report of Amazon, annual report of Infosys, Tata, and it is a good habit to read one annual report, because then you will understand the impact of what you are learning. See, one is passing the exam. After passing the exams, you'll be working on some company where you will be preparing some aspects of this annual report. Okay. And unless you see where is my learning being applied, then there is no point in the learning that you get. So here, as somebody rightly asked how it is done, so you give a breakup like this. So in operations, you are giving your core. So for Tata Motors, vehicles, spare parts, other products are their core operations. But if they sell computers, used vehicles, their own company's vehicles, or land and buildings, or any other investment, that is not their operations. Okay, so that you have, or you show it separately. And this is called notes forming part of financial statement, where you give more details. So one more thing what you have to understand is, for a lot of you have not worked in entities. Okay, just a moment. So look at this. Look at this equity share capital. In the financial statement, on the face of the balance sheet, you cannot give so many disclosures. So what will you do? You will just say, this is the final amount of equity share capital or common stock. Subsequently, in the notes, you will give the breakup. Okay, these many ordinary shares, these many preference shares, right? So that is what you will give subsequently in the notes. Okay, materiality means important. So for example, when we say you disclose material items in the financial statements, what it basically means is, for a company like, let's say, Reliance, or for a company like, let's say, Tata Motors or Amazon, a small expense of 100, 200, 500,000 will not be relevant. So they will not show it separately in the financial statements, or they will not give disclosures in the financial statements unless required by the law or standards. Okay, so here you see, amount itself is shown as 000 and star. Why? Because amount is very less. If you give the breakup of that, then gone. It is less than 50,000. So for them, maybe less than 50,000 is not material. Okay, that is how presentation happens. Okay, so enough of this discussion. So let us move on to the other discussion what we were having actually. We have something called as continuing operations and discontinued operation. Now, what is the meaning of this? Does anyone know what recently happened with Citibank credit card operations? What did they do? Citibank credit card operations. In the last 1 year, did anyone follow the news? What happened with Citibank? They sold to Axis Bank. Okay. So just for our example, let us say Citibank has corporate banking and let us say credit card for retail. Okay. What did they do? They sold this credit card business to Axis. Okay. Now think of it. Year 1, year 2. Revenue, expenses. In year 1, revenue is 10,000, expenses 8,000. In year 2, revenue is 5,000, expenses 4,500. Now, why was there a dip in year 2? Because they sold one division to the other bank, that is Axis Bank. I think this Zoom is sufficient for laptop viewing. If you have mobile, then I think that may be slightly difficult. It's already at 380% zoom. If I zoom it further, I'll not have place to write. Okay. If I zoom it further, how will I write and present things? So from next class, please try to use a tablet or a computer. Okay. So now in year 2, there was a dip because we sold the business to credit card division. as an investor, you must know what is the impact of the discontinued operation. What was the impact? How much of revenue did we lose? How much of expense did we lose? So what the standards require is continuing operations you have to show separately. Discontinued operations you have to show separately, which means in year one also you have to break it up. What was continuing operation? What was discontinued operation? So that you can compare both of these. Okay, so we will be using two concepts. So you want me to zoom? So you wrote zoom out, is it? I thought I just read it as zoom in. Sorry. So from tomorrow's class, this file will also be available to you. In fact, I'll give the link now itself. You can. So towards maybe it is getting synced, and I will share it with all of you so that you can have a look at during the class itself on a browser. Okay. Right. So we have what we're discussing is we have to give the disclosure of discontinued operations separately. So how much money or income has been earned from continuing operations and how much money and income has been earned from discontinued operations, that has to be presented separately so that investors understand what is the impact of discontinued operations. Okay. So now we'll see how do we prepare. Audit report will not be changing. What you will be doing is you will be just breaking it down. The previous period statements also will be restated as the continued and discontinued. We will be we'll be understanding that in the subsequent section. Okay, how it is presented. And so one is we have what we follow is the multiple step income statement. Basically, report operating revenues and expenses separately from non-operating revenues and expenses and other gains or losses. So basically, you are presenting, okay, these are the items from operating expenses or operating revenues. This is my core operation. These are my non-operating revenue. These are my non-core operations. Okay, so that is how we will present. Now, here you can see you will restate for whatever is the comparative period. So let us say you are presenting 3 periods. If you are required to present 3 periods, you will restate for 3 periods. If you are presenting 2 periods, you will present for 2 periods. Now, the following trial balance. Now, trial balance is basically the balances coming from your ledger accounts. They have a list of income statement for the year ended. Now, here you can see on the left hand side, 4,000, 5,000. 4,000, 5,000, 6,000. These are your general ledger codes. Okay. Now, 4,000, if you see 4,000 series is talking about revenue. 5,000 series is talking about expenses. Right? Till here it is expenses. 6,000 is talking about interest revenue, other income. 6,200, other revenue, other income. 6,500, gain on sale, again, other income. Then interest expense, loss, restructuring expenses, and discontinued operation. So what they have said is, they are basically this kind of coding, general ledger coding is what we call, that is done so that, what do you say, the users, whoever, whoever the users of the finance, users or preparers actually, not users, the one who is preparing the financial statements, they know this GL code means it has to go to revenue. That is how systems are mapped. So if you have to create any revenue item or revenue ledger in that particular system, what you will do is you will put in that particular code only. Okay, that is how the coding system works. Same way you will have codes for balance sheet ledgers. Okay, so if you are working in any ERP, we have something called as general ledger code. That is what is presented. Then next to that we have whether it is an item of income or whether it is an item of expense. Okay, that is the second part of it. Then debits and credits amount. So one more thing you have to keep in mind is even income accounts can have negative balance or the debit balance, and even expense account can have credit balance. So what you learn that income only debit, income will only be credit. That's not the rule. Sometimes reversal of income can cause income being in debit balance as well. Okay, so that is the thing. Now, what are we required to do in this given question? Salaries expense 20 relates to salaries for salespeople and 50 relates to salaries for officers of the company. So sales expense and admin expenses. Restructuring expense relates to an restructuring of the service division, which is infrequent, means not regularly carried out. Prepare a multi-statement income statement from the trial balance. So what we'll do is, we'll actually take these numbers and we'll present how do we prepare the trial income statement. Okay. So when we prepare the income statement, so let us go back to the trial balance. I'll just copy this. Or we can do back and forth. That should be fine. This is on page number 6. Now, what are we required to prepare? We are required to prepare the income statement using a multi-step approach. Okay, multi-step means basically giving a detailed breakup. So whenever we start with income statement, we start with net revenue. Now, how much is the net revenue given? The net revenue, if you see sales revenue, we have 380. Sales revenue, we have 380. And then we have service revenue of 200. We have rental revenue of 100. So 380 plus 200 plus 100 makes it how much? 380 plus 200. 580. 580 plus 100 makes it 680. 680 returns are there. Sales return means you have sold something, the goods have come back. Sales discount means discount which has been given. So net revenue, if you see 380 plus 200 plus 100 minus 30. Right? Minus 30. So the net revenue will be 650. How did we get that? Again, sum of credits and sum of minus sum of debits. So that is how we say this is the net revenue. Now this other revenue will be presented in other income statement. Okay. Then just a moment, I'll just hide this. So net revenue of 650. Then the next part that we will be disclosing is the cost of sales. Now cost of sales, you see 200 plus 150, 350 plus 60, 410. So cost of sales 410. Cost of sales 410. Okay. Then so we have covered till here, whatever is the cost of sold, services, rental, and all of those things. Right. Then this gives me the gross profit or gross margin. So 650 minus 410 gives me a gross margin of 240. Okay, very simple. There is nothing complicated, and you don't need to remember, but you need to remember the broad structure or the broad format that we have to use. Okay. Now after the first part, that is your income and expenses or cost of goods sold has been presented. Then what we have to do is we need to present other expenses. So other expense includes selling expense, general admin expense, depreciation expense, all of that which are a part of your operations. Okay. So what are the other expense? So you have salary expense. So till here you have considered. You have salary expense of 70. And they have given a star mark, and there they have said 20 relates to sale and 50 relates to officer. So this salary we have to split between how much is spent for sales and how much is spent for officers. Okay. Same way, what is tried out is my selling expense. Commission is my selling expense. Advertisement is my selling expense. So all of these I have to present separately as selling expenses. So selling expenses would be, we'll just note it down here. Salary. Everyone, please mute yourself. salary 20. So $20 plus freight out 25 plus commissions 40 plus advertising 15. So 100 is the selling expenses. How is rental income operating income? Maybe their business is they have a business of letting out properties. That could be the core business. Okay. For example, if I have, let's say Amazon. Amazon has sale of products also, sale of services also. Maybe they have one more vertical which deals with hotel business or renting of property business. So that is why we have taken it as a part of revenue. How do we know here? Here because they are clubbed. Other incomes are given separately. If you see here, other incomes, other revenue are given separately. So this is a part of the core revenue. Okay. Here they have said salary 20 relates to salary for salespeople, 50 to officers. Officers means admin officers. So unless they mention sales officers, you will not consider it as sales. So that will be taken under admin expenses. Okay. So we have done the next part, general admin expenses. This is minus 50 minus 50 we have taken. Then insurance 20. This 70. Then depreciation. Depreciation is given to be 80. So all of these are your expenses related to operations that we call operating expenses. Okay, all of these are your operating expenses. So the total of operating expenses is 250. Profit loss from operations 240 minus 250, it is a 10 of loss. Okay, so that is still operation, that is a core activity. Then after that we have other revenue, interest revenue, other revenue, gain on sale of security. Then we have interest expense, loss on sale of fixed asset, restructuring expense, and loss on discontinued operation. Right now, other incomes, what you can do, you can present as a single item and give the breakup in notes, or you can say other revenue and gains or income. Other revenue and gains or income. Now what is there in other revenue? Interest revenue 170, other revenue 130, gain 50. 170, 130, 150. So 170, 130, 170, 130, 50. Now you can take the details from here itself. So here it is interest, other revenue and gain. I'll come back to the questions. Please follow till the time I finish it. So all expenses are denoted with a negative sign. Okay, so here the other gain is other revenue or gain is 350. Okay, then we have to see what are other expenses. Under other expenses, we have interest, loss on sale of fixed asset, restructuring, and the amount is 50, 40, 100. So whatever you get after this is income before taxes. Then 350, 190. Income before taxes is 150. Then they are given us taxation details. Income tax expense is 100. So you will reduce 100. Then you have income from continuing operations as 50. Then they have mentioned discontinued operations 25. Discontinued operations 25. Gain or loss? Loss. Loss from discontinued operations 25. So that gives you the net income of 25. Okay. So that is how we present. You can go through this format a couple of times to get more comfort. Now let me look at your questions. Signage. Negative is expense, positive is gains or revenue. Why we have shown sales on net basis? See, sales on net basis means net only aspect related to sales. When we say net gains or net losses, it is income minus expenses. So this is still my revenue without considering any expenses. That is how it is presented. Other revenue along with core revenue is generally not done. You can have a line item here, for example, in Indian context. So you have to see the respective context. If you look at this annual report, here they have given revenue from operations and other income together on the top. Okay, so this is one way of presentation that is followed in India. The other presentation that we discussed that is followed in the US. So because we are writing US CPA examination, that is how it will be presented. Okay. What is restructuring cost? We'll have a discussion on restructuring cost subsequently in another chapter. Okay, that point of time we will be able to understand. Restructuring is not frequent. Restructuring, think of it, no? Restructuring is something like you have your home and you are carrying out some renovation. Now, will you say renovation is a frequent activity? No, right? The renovation you might be doing once in 7 years, once in 10 years. So restructuring is also something similar to that. Okay, discontinued means, for example, I have discontinued an operation mid of the year. Okay, in June, I have discontinued operation. So from 1st of January till 30th of June, I have to disclose that separately. That is what we are doing. Loss of discontinued, we will not discontinue just at the end of the year. We might have discontinued in the mid of the year also. So whatever is the amount pertaining to that discontinued operation, that we are disclosing in the income statement. Next year, it will not come. Comparative will be there, but it will not be there. Sir, if instead of tax amount, tax percent was given, then we will calculate as per the tax rates applicability. We have a separate chapter on calculating tax. Sir, please explain general and admin expense. Okay, so in any business, if you see, one is your core operations. For example, think of a mobile showroom. Okay, purchases of mobile is your inventory. Sale of mobile is your core revenue or revenue. Then that mobile cost will become your cost of sales. Now, in the particular mobile showroom, you may have some salesperson, who will explain you the product, who will give you discounts and who will convince you to buy. That is selling expense. Admin expense means maybe there is someone who is an accountant, or the expense of rent of the showroom, or expense related to electricity, air conditioning and all of that. Those are called administrative expenses. Business that has been discontinued has been sold off. Why are we including? Till the time we have sold off, any income or expense is there, we have to consider. Why have we not taken full salaries in general and admin expenses? The question has mentioned 20 is for sales personnel. So that we have taken is as sales. Where can I practice? You can practice from Becker's portal. Sales on net basis that I've already covered. What will be the procedure if we have non-operating revenue? So this revenue that is given, other revenue here is non-operating only. Same treatment. What could be other income mentioned here? Where? Here or so there we saw the breakup, no? Tata annual report, interest income, dividend income, and all of those things. Why tax impact is not considered? It is already considered. This number 25 that you are seeing is after the tax impact. We will have a subsequent discussion where we will calculate the tax impact. We showed, so when we say gains on, so for example, gain on available for sale security, that is shown on a net basis. That is, see, interest revenue and interest expense are not related to same item. Interest revenue may be from fixed deposit. Interest expense may be from loan. They are not related to the same thing. Other income, generally you don't show it as a breakup on the face of it. For example, if you look at Amazon's here, they have given interest income, interest expense, and other income. So again, how much to disclose depends on the importance of the item. See, taxation discussion we'll have in a separate chapter. It is a too advanced discussion to have it right now. We have taken net sales, net of discount and sales returns only. Discontinued operations, again, we have a separate discussion. We'll cover it there. Yes, other revenue you can consider you can see here, total non-operating income, your other items. For practicing journal entries, what you can do is, you can reach out to me either on LinkedIn or this is my email ID. You can add me on LinkedIn and send me a message there. Okay. So there is already a course. Simandhar already has some course where you understand basics. Okay. If that is not sufficient, then you can ping me on LinkedIn, and this is my email ID for you to search me on LinkedIn, and I'll guide you on how you can access, how you can get this. Okay, sir, if you give salaries to CEO, it will be general and admin expenses. Please help with PDF. How can we get? Okay, PDF book. The PDF that I'm using, the book that you will be getting would be same. These resources are available in Becker portal. Please reach out to the students support team. They will help you out. Inventory means stock. Stockholder means shareholder. Freight-in would be a part of your purchases and cost of goods sold, inventory cost. I sent you a message before on LinkedIn, but no reply. Oh, sorry. Can you just ping me on top of it? I'll definitely reply. I would have just normally 99% of the times I do respond. If I have missed it by mistake, please send it. I'll respond to it. Sorry for that. Salaries to CEO, will it account under admin salaries? Yes. Balance sheet presentation based on liquidity means current assets are more liquid. Okay. Goodwill or property, plant and equipment are less liquid. Liquid means how quickly can you convert them into cash. So cash and cash equivalent is the most liquid. Goodwill is the most illiquid. Now, when we say order of liquidity, you will present from most liquid to least liquid, or from least liquid to most liquid, because it is related to administration of the company. That is why salary of the CEO is your admin expense. If you say a salary of sales manager, then it is a selling expense, sales expense. Right? So it will depend. See, every company will have the sales department, the purchase department, and all of those things. Accordingly, the presentation will change. Right? So with this, we will conclude today's session. I don't want to stretch today and tomorrow. Okay. Tomorrow we'll continue from where we have left today. And in the meanwhile, quickly revise annual reports you can go through. See, Shika, what happens is every company has a designated roles. Someone is a CFO, someone is a marketing officer, and all of that. Okay. So all of that, depending on what is their role in the organization, accordingly, the expenses will be classified. Are there a practice question specific to the section? We will be covering some practice question from the portal. The effect of discontinued is shown only in the year the business was discontinued, and the multi-step presentation. No. Multi-step presentation is done always. Discontinued operations are shown in the year of discontinuance and comparative for the previous period. Okay, that is how it is done. Excel sheet, just a moment. I'll share it with you. It is not being shared by EOD today or tomorrow. You'll get it. Sir, I have a doubt regarding net and gross concept. If any company is engaged in two types of business, like selling in car and selling of land, both of income gross basis, expense also gross basis. You understand the concept? Okay, the way you have to prepare, I told in the beginning also, I'm repeating that. After this class, what you will do is you'll go back and you will revise the concept. And after the chapter gets over, you will do the practice. You will practice MCQs and simulations. And then if you have a doubt, I think there is also a Telegram group which is there. You can post it there, search there. So there you will find most of the responses already given. Okay. And then if there is further doubt, then you can reach out to us. Yes, for both businesses, they report on gross basis. Okay. So it will be complete the class, revise the study material, practice MCQs and sims, and repeat the process. Sir, discontinued gain or loss taken for food? No. So basically, if I have sold off credit card division, then the credit card division's related income and expenses and losses till the date of discontinuing, that is presented separately. After that, if there is any subsequent expense, that is also discontinued, but only that period. As I have repeatedly told since the beginning, for Becker portal, for access to Becker portal, material, soft copy, hard copy, you please reach out to the student support team. Okay. I will try to get the contact how to reach out. I think there is some ticket creating system. You can use that and you can access the Becker portal. Or there will be some they'll guide you how to access all of this. I am not the right person. Okay. Chalo, so again, I'm repeating for everyone who needs access, who has access related issues, portal related issues, all of those things, please reach out to the student support team. Tomorrow we'll continue from where we left today. LinkedIn, you can search my name. Just type Suraj Lakote, you will get. Okay. You can send a connection request, I'll accept it. Yeah, we will try to complete the first part, at least module 1, or it may spill over to the next class as well. Okay, if you have sent it now, I'm not on LinkedIn immediately. I'll do that. By EOD, I'll accept all of this. Okay. Sure. I hope the class was useful. You're able to follow whatever we have taught, or whatever I have taught. Gradually, we will increase the speed. Gradually increase the speed as well. And if at all any point of time you feel I'm teaching very fast, you can let me know. Again, I'm repeating, for MCQ, where to access, how to access, the team will tell you. Okay. After the module gets over, you can go and you can practice the MCQ. Sure. Thanks a lot. F1 4 modules usually takes how many days? So it depends on students. Okay. How quickly you can grasp the topic, accordingly the time will also increase or decrease. Normally we try to cover it in 3 to 4 sessions. Earning before tax is operating plus non-operating income. Excel file link will be shared. It is some sync issue. Once it is done, I will share it. Okay. Sure. Thanks a lot. And I'm ending the session.